Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And what I want to talk with you today is about what's going on nationally with real estate. What's the forecast for real estate prices the rest of this year and beyond? But to help us understand it, I also want to look at real estate in one locality. So I want to talk about what's been going on with real estate prices in Greensboro, North Carolina, because it's a lot to learn from that. And it's been a hot market, a growing area of the country, the Piedmont of North Carolina. There's been announcements of new industries coming in, this giant Toyota facility, expansion at the airport. But before we get to that, I want to explain first a little bit who I am. Every single day, Monday through Friday, that is, before the stock market opening bell in the morning, I sent out a completely free news digest with links to my articles and also the top stories of the day that I see across the internet that I think you should know about. The President of the United States gets an intelligence briefing from the CIA. This is kind of like your briefing, and you can get it simply by scrolling in the description of this video. You see the link, click it, subscribe, completely free. And I'm going to put an article about this in there, so you're kind of getting it ahead of time. But anyway, when it comes to Greensboro, this is information compiled by the website Roofstock. According to their information, and this is a month old, so we're going to show you how fast things are changing. But a home value index is 238,000. But this is what's important. Home values in Greensboro have gone up 24% over the last 12 months. Over the last 5 years, they've gone up 75%. Medium square foot listing, $143 per square feet. They track 132 neighborhoods in Greensboro, Grandover neighborhood being the most expensive of houses, running at 651,000. That's the Silver Spoon neighborhood of Greensboro, to say the least. They claim it's an attractive renters market, but here's the thing: just by those stats, real estate's been red hot. But Rocket Homes has even more up to date information, up 13% from June over June, and the number of homes sold is actually picking up. More homes are. This is what's interesting to me. And we're going to link it to the forecasting, but the number of homes selling is now ticking up. More homes are hitting the market. 14% more homes in the month of June than it was in May. 239 homes were sold over the asking price. So it's a sign that the real estate market is still red hot. Only 65 homes were sold by the seller having to bargain down. So it's a seller's market. It's red hot. Average sale time is only 9 days. Only 9 days. Only 6 homes took over 90 days to sell, over 300 under 30 days, and 19 in between. So it's not simply that the average sale day is 9 days, but almost all the homes, 93% of the homes, were sold over 30 days. You could, I don't know where you live, but there was a time when it took months to sell a home in Greensboro. Not now, and it's been not now for the past 2 years. This is a red hot market, but is this situation going to continue indefinitely? Nothing goes straight up. In 2006, real estate prices peaked out across the country and plunged, and then there is a Wall Street meltdown. Now, I don't think that's going to happen, but I do think we're headed for a softening in the national real estate market that is likely to even impact Greensboro. And what I'm looking at is, I wrote this in an article. So again, get my future articles, subscribe for free below there. But this is an article I wrote, and I took note of the real estate futures market. You see, I've been trading the financial markets now since the 90s, and there's futures that trade on real estate. What are real estate prices can do? And I have found this to be the most single accurate forecasting device for what real estate prices are going to do within the next 12 months. So up until recently, these have been projecting higher and higher and higher prices. But that situation has now changed, and the real estate futures market is now suggesting that real estate prices have made a temporary peak nationally and are likely to dip approximately 14% from their highs from about now to sometime bottoming out in the fourth quarter of 2023. Now, 14% is not a crash. It's not the type of decline that happened in 2007 or 2008. It's nothing to be scared of. But look, the Federal Reserve is raising interest rates. That impacts the economy. It impacts real estate prices because every time they raise rates, and they're going to do it again in July, they're planning on doing it in September through December, through the end of the year. And every time they do that, it causes the price that the buyer pays on their mortgage, the interest, to go up, and that impacts real estate prices. Historically, real estate prices will actually go down when interest rates go up, and bottom right when that interest rate hiking cycle comes to an end. So if we think of it that way, this is also forecasting that the interest rate hiking cycle will have played out, by probably the second half or fourth quarter at the latest of next year. Probably the peak in hikes will be much sooner than the fourth quarter. But this is all going to impact the real estate market, and I think it's good to be aware of that. Does that mean you should not buy if you're thinking of buying? Not necessarily. You see, if you buy now, you're buying before the interest you're going to pay on your mortgage goes up. So it might be better to buy now, even if the price of the home is just going to pause or go down a little bit, because once this dip, if it plays out this way, the prices will resume going up. It's like, that's just how investing works. So don't expect the prices to continue to go higher as they have the past 12 months, the past 2 years, over the next 12 months going forward. Look for a pause. Don't be alarmed by it. And you may want to get ahead of the rates going up, or if you've got the cash to buy later with the big down payment, or the biggest as it can be, or not even take a loan, then it might be better to wait a year. It all depends on the situation the person is in. I can't give you personal investment advice. It's not what this is about. My videos are about seeing what's going on in the economy, the markets, the news world, and being well informed on things, and so we can, navigate the world, understand the world, take advantage of situations as they arise. So this is the first time you've seen me on YouTube, hit the like button. Hit the like button if you've seen me before, because it helps me, because then YouTube will show the videos to other people. But this is the first time you've seen me, hit subscribe, and then hit the bell next to the subscribe button, and then YouTube will send you an alert as soon as the next video is up for you to watch. And I'll be talking with you later.